Welcome. Thank you so much to everyone who's joining us today. We are here to talk about some home buying basics and information for military families about VA loans and mortgages, hosted by BB America's Bank. I'm Lizanne Lightfoot. I'm the Director of Marketing at GoVA Foundation. We're a nonprofit focused on providing financial education directly to the military community by providing resources for service members, veterans, and their spouses. And we partner with banks throughout the country who host these resources and sponsor your membership. So I'm really proud to introduce BB Americas as our sponsor bank today, and Ruben Rojas, who is our expert speaker. So Ruben, can you please go ahead and introduce yourself to our audience and tell us a little bit about the topic today?
Absolutely. So my name is Ruben Rojas. I'm the CRA liaison for BB America's Bank, and I'm very, very excited to talk about mortgages and also veterans benefits. This session is going to be pretty information heavy, but it's information that is very, very important. Feel free to ask any questions that you have as we're going through the presentation. And we were going to have a loan officer here. She wasn't able to make it, but I will say if you guys have any questions or would like to contact her, I am happy to share her contact information. And we are here as a bank to support the community in all of the questions. I want to make sure that I express that I am not a mortgage professional or expert. I work with the community teaching financial literacy, but we do have experts in the bank, and I will sort of share very important information. We're also not a veteran loan experts. So we just want to make that very clear, but we are able to show sort of the general differences between a veteran loan and a conventional loan. And we'll get into that a bit later.
Thank you so much. I'm really excited that BB Americas chose to focus on this topic. We have members that are throughout the country, but this event is specifically for our military families throughout Florida. That's where BB Americas is operating. And we always get questions and inquiries from that area about how do I compare different mortgages? Please explain the benefits of the VA loan to me. And so we figured who better to do that than a banking representative themselves. So that's what we are bringing to our audience today. I want to invite Ruben to go ahead and share his screen and set up the presentation. And for those of you who are joining us live, I want to invite you to introduce yourselves and use the chat throughout this event. Ruben has been very helpful in the past with immediately responding to questions and really engaging with our audience. So we are looking forward to another interactive presentation today. So you can start by telling us in the chat what part of Florida you might be signing in from, or what questions that you have about the home buying process. And feel free to type them also while he's speaking, and I will verbally call out those questions in the chat as the presentation goes on. So Ruben, go ahead, and I'm going to turn it over to you for now.
All right, beautiful. And can you see the presentation?
Yes, indeed.
Beautiful. And again, if you have any questions, feel free to drop them in the chat, and we'll be happy to sort of navigate those questions as we go through. So buying a home, we're going to talk about buying a home, conventional mortgage basics, and VA mortgages. Again, buying a home, I think is extremely, extremely important. It's our safe place. It's sort of part of the American dream. And we all want to make sure to go through that process in the best way possible, because it can be complicated. But today we'll go through some specifics to help you understand sort of like the process and how to prepare for the mortgage application. So we're going to talk about the basics, down payments and PMI, types of mortgages, the process, the pre-approval, the application, closing. So that's going to be sort of the first half of this presentation. And then we're going to get into VA loans versus regular loans. What are the differences? The VA home appraisal process, the VA approval underwriting process and protections, VA mortgage loans, the speed, how it differs from conventional ones, what to expect, and VA mortgage credit requirements. So again, today is going to be information heavy, but again, if you have any questions at any point, please feel free to drop them in the chat. We can stop, we can sort of look at them together. Or if you have questions after, I'm happy to share my email, an email of my colleagues, and we can sort of go into it a little bit more. So we'll go on and dive in. So the basics: mortgage terms, APR, and interest rates. So mortgage terms is how long a borrower has before everything must be paid back. So the most common options are 15 years or 30 years. Others may be available, but those are the typical terms. The APR, I'm sure you guys have already heard this, and a lot of you maybe have already bought a home, but I think going through these basics is just essential before we get into the deeper things. The APR is the annual percentage rate. Again, this is the number that represents your yearly cost of borrowing. It accounts for interest, fees, points, and more. And again, so points. What are points? They're also known as prepaid interests. Points are interest that you need to prepay when you close. Buying points is a way to lower your interest rate. Each point costs 1% of your mortgage and often lowers your rate by 25%, though that amount is not guaranteed. So there are two types of interest rates. There's adjustable and fixed. So your rate will change. With adjustable, your rate can change with the market, meaning that it can go up and down. And fixed is, as it sounds, it does not change. Your rate will stay the same throughout the mortgage, no matter what happens with the market.
Yeah, I think it's really important to understand those differences because we're always encouraging people to shop around and compare mortgages. And sometimes you don't even know what you're comparing or how do I understand if, they're all different offers for the same property. How is it going to make a difference in the long term? So we appreciate you going through some of those acronyms and those terms so that we can really understand how to use some of those comparison tools, which I want to remind our viewers are available in the Edge. Thanks to the BB America sponsorship, you all have access to mortgage comparison tools in your platform.
Right. And if you want to make this sort of like simple and you're maybe taking notes, maybe you just want to put a question to yourself: do I want to do 15 years or 30 years? Like what type of plan you want to look for, and maybe just put in some of the acronyms like, okay, APR, what type of APR can work for me, and then also sort of adjustable and fixed. And once you just sort of simplify it from the definitions, which you can always look back at, and we start choosing little by little what makes the most sense with you. It's sort of simplified because this gives we're giving a lot of the options of and definitions of what could be. But I think once you start listening to some of the definitions, you're like, okay, no, fixed makes so much sense because it sounds secure. It's not going to change with the market. Mm-hmm. Or you think, oh, I want to try like the market. The market could be beneficial. So as we go through these things, feel free to take notes and sort of write down things that make the most sense to you. And it could help simplify sort of the definitions, right? All right. So we'll continue to down payments and PMI. So one of the biggest hurdles is to buying a home is the down payment. So this is the percentage of the total home cost you need to pay up front. The lowest amount you can pay depends on what kind of mortgage you're trying to get. But I think we know that the bigger that you can put of a down payment, the better, right? But not all of us have that money that's available. So there's a lot of different options that we can look at. For example, like the FHA loan typically requires at least a 3.5% of a down payment, while a VA loan requires no down payment at all. Okay, so now as veterans, you're probably thinking, okay, this is great. I don't have to worry about that. It's such a relief. We'll get more into those details in the second half, but it's good to know what the conventional loans require as well, because you may want to take that path, or you might want to take the other path. So regardless of what's required, the more you pay, the better. So paying more means that you owe more of your home. Your mortgage payment will be smaller, and you're better protected from becoming upside down in your home and owing more than it's worth. Depending on the type of mortgage you get, you'll likely be required to purchase a private mortgage insurance, which is PMI. Okay, that's something you want to write down. Like, what is the PMI? It's a private mortgage insurance. This is if you put down less than 20%, this will protect the lender in case you're unable to make your payments. So again, if you're not able to put 20% as a down payment, you'll have to get a PMI. You have to get that insurance. But if you put 20% or more, you don't have to get the PMI in very simple terms.
Yeah. And these two are actually some of the biggest perks with that VA loan because, as you mentioned, you don't have a down payment when you do a VA loan, and you also are exempted from paying into PMI. So it is usually a savings on your monthly mortgage payment when you do VA, but obviously we're going to get into some of the details. But those two are the big ones that people always talk about with VA loans in particular.
And it's huge because you can save thousands over a long period of time without having to be the PMI. So these small seeming benefits can make a really big difference, especially if you have a mortgage of 15 years or if you have a mortgage of 30 years. You notice that the interest rate or the PMI over a long term makes a huge difference. So we definitely want to make sure that you take advantage of any benefits that can help you over a long period of time. So let's go over a few of the most common home loans, just to get a perspective, sort of a bird's eye perspective of all of the loans that are available to you, and you can start thinking of what makes the most sense to you. So the conventional mortgage is not backed by the government. So it would usually have a fairly simple, straightforward terms and lower closing costs. However, you may have to pay a higher interest rate or need to pay a higher down payment. So at least 3 to 5%. And this loan is usually best for people with strong credit, and it will affect your interest rate. So again, the conventional has higher interest rates, normally requires higher credit, but normally it's simple and straightforward and lower closing costs. Okay. So next one is the government-backed loans, for example, the FHA loan. And it's meant for low to middle income borrowers. It typically has a lower down payment, usually 3.5%, and you'll need a credit score of 500 or higher to qualify. So this is really, really important for maybe you're not in a place that you have the highest credit score, but you're in a place that you need to buy a home. It's, you don't want to be spending your money in rent anymore, and such a great investment. But you're definitely ready to take that step. This is definitely a great option. And then there's another option, which is the USDA home loan, which is backed by the U.S. Department of Agriculture and only available in certain rural and suburban areas. So if you've gotten tired of the city life, maybe you're coming closer to retirement, and maybe you live in an area that's agricultural, this can apply to you actually. And let's see. So the income requirements, you need certain income requirements, it says here, and then there are caps of how much you can make depending on the area. So you want to look at those specific things, and you won't need to pay a down payment. And those are sort of the perks with that. Okay, so VA home loan, which we're going to get into more in the second half of this presentation. But in short, it's backed by the U.S. Department of Veteran Affairs, and thus only active service members, veterans, and some spouses are eligible. And typical borrowers won't need a down payment or mortgage insurance for this loan. Borrowers generally need a 650 credit score or higher to qualify. And actually, I did some research before this presentation, and another website said 620. So it might depend on the year. There are like slight changes, but we can expect from like 620 to 650. All right. So again, those are the types of loans. So just keep it in the back burner that there's the conventional, sort of the agricultural one, if you don't have so much money or a lower credit score, there's government-backed loans. So we have those options. So you can start thinking and start processing what makes the most sense for you. So let's talk about pre-approval. And maybe you've gone through this process already. Maybe you've heard of the pre-approval, but let's go through the basics. So again, a pre-approval is just an agreement from a lender that you have the specific conditions that you're ready. It's just a sort of stamp of approval, an application that says you're serious and you're ready to go. So again, you'll most likely be approved by a borrower by a defined amount at a certain rate. In order to get pre-approved, you'll fill out a mortgage application. And if you are pre-approved, you'll be given a letter that shows that to sellers that that you're ready to go, that you're serious. It may be harder to get your offer accepted if you don't have a pre-approval. So when you're ready to start your search, you should do this first. Your pre-approval will usually be valid for 60 to 90 days. And a pre-approval is not the same as pre-qualification. Okay, so pre-qualification can help you whether you're on the track to be approved or not, but it won't add as much leverage. So again, pre-qualification is sort of pre-approval, right? So pre-qualification is telling you, okay, you're sort of going to be qualified for the pre-approval. But if you're just you get a pre-qualification, again, it doesn't give you that much leverage. So again, in simple terms, pre-approval is just like a stamp of approval. It's a stamp of confirmation that tells lenders and it tells people that you're serious. So if you see a house and you start applying and you don't have a pre-approval, there might be someone else that has a pre-approval that has leverage over you. So we definitely want to make sure that you have this.
Right. I think it's always exciting to be looking at those real estate photos and, virtual tours of houses feels like the first step in the home buying process. But to your point, especially in recent years when it's just been a seller's market and there has been multiple offers on properties and things are moving very, very quickly. If you are a family that's trying to especially visit an area and buy a home, in a particular time frame, you want to come with that pre-approval letter in hand so that you're literally ready to go and to make an offer on a property that you might be viewing.
Absolutely. And maybe because I'm from Florida and I've lived in North Florida, I live in Miami, I'm from Miami. What I've seen is it's pretty tough market lately. So there's a lot of beautiful houses in Florida. We have beautiful weather. But you definitely want to be ready with that pre-approval because it can be competitive depending on the area. All right. So the mortgage application. So to determine if you can qualify for a mortgage, the lender will need all of your personal and financial information, including bank statements, tax returns, pay stubs, and more. They'll also consider various factors such as your DTI, which is your debt to income ratio. Again, how much debt you have compared to how much income you have. And then your LTV, another acronym, which is known loan to value. Again, LTV is loan to value and DTI is debt to income ratio. And the loan to value is how much you're borrowing compared to how much the house is worth. And again, finally, your credit score. To finalize everything, an underwriter will review your application, credit score, personal information, and previous pre-approval to give you one of the 4 possible incomes. You can be approved, you can be conditionally approved, you can be suspended, or you can be denied. Okay, so 4 of those things can happen. But again, they're looking at all of your personal information, your bank statements, your tax returns, again, your pay stubs. They're looking at that. So we want to keep that in mind. When we feel that we're ready, we sort of want to look at our information. We want to look back at sort of like how was our credit score? What is our DTI? Maybe we never looked at that. Maybe we never looked at the LTV either. And we can easily Google that or even use the Edge platform to help us with those calculations and make sure that before we do the mortgage application that we're ready and we know what they're looking for, right?
Yeah, definitely. This is absolutely where I would encourage our viewers to go onto the edge, because there are so many very user-friendly, interactive tools. Debt to income ratio calculator is definitely one of them. There's a mortgage comparison rate calculator if you're talking to 2 or 3 different companies or looking at different lengths of time and different interest rates. You can really see how those small number adjustments can make a huge difference in what you're paying over years and years. So absolutely get on the edge and check out just some of these basics about understanding mortgage applications, understanding the process, knowing what questions to ask, and then getting a sense of how your numbers and your family's personal situation is going to impact this process for you. The more that you know about it, the more options you have, and the more empowered we hope you'll feel.
Absolutely. Absolutely. All right. So speaking of empowerment, improve your odds of approval. So first things first, boost your credit score. Get your report and check it out. Look for errors. There could be errors. We want to make sure that everything's aligned and correct, and look for places that you can make the biggest impact. Okay, so I think looking at our credit score is maybe the easiest place to start, and making sure that we're at where we need to be. So next is lower your DTI by paying off as much debt as you can. I think this makes sense. So buying a home or getting a mortgage is such a big decision, right? It's a big loan in our lives. So generally speaking, we don't want to have a lot of other loans to be able to balance things out. And they look at this. So you want to look at what loans you already have. Do you have a car payment? Are you about to pay off your car maybe? And it's the perfect timing to buy a home. So we want to look at our DTI to make sure that we don't have too much debt. Also, save up for a higher down payment. If you know for sure that you're ready, start saving up for that down payment. Again, a bigger down payment that you have, the better. Look into a house that is less expensive. Even if you feel confident that you can make payments for a house that's top of your price range, your lender may not agree. Don't make big purchases before you're approved, and it could be a red flag for lenders. So for houses, maybe we have that dream home that we think, okay, we can get this, but it's good to have a few options. You can have that dream home that you can afford, but finding one that is less expensive can really make a big difference when it comes to the lending process, and you're actually approved for what you didn't expect. So we want to be ready for both situations. And I've seen a lot of friends of mine. I've seen a lot of things, a lot of reels of like fixer-uppers as well, in the sense that it may not have been the home of their dreams when they first bought it, but then they completely transform it and make it even better. So there's always that option.
For sure. And I think it's important to remember how those small improvements and small changes in areas that you think are not related to your home buying process, things like your credit score, things like your debt, even your credit card payments. You're thinking, well, I've had my credit card for years. It has nothing to do with this home buying process, but it really does, because it's being factored into that overall debt ratio. So if you can even start paying down credit card debt, or, closing an account on one card, or paying down one card's balance, those are all small things that can really help you in the long run. And I like how you pointed out that it's always important to save and start having a savings account to build up for that down payment. And I want to remind military families, even if you are using that VA loan that doesn't require a down payment, there will still be some other costs at closing, and I'm sure Ruben's going to get into them, but closing costs are different from a down payment, and it's always useful to have additional cash on hand that you can pay into that process, even when you're doing a no down payment loan.
Definitely. We want to make sure we have enough money for all of the associated costs that come with buying a home. So speaking of closing, so closing is when you seal the deal. At this stage, you'll need to come prepared, having reviewed the closing documents and likely with proof of homeowner's insurance. If you agree to all the terms, you'll sign all the documents to make everything official, pay your down payment, closing costs, and any prepayments. Finally, when it's all said and done, you get the title and the keys to your home. So again, once you've gone through that application, you're approved. There are closing costs that you need to pay close attention to. And we have to also start thinking about homeowners insurance. So those are costs that we need to factor in once we're making a decision to buy a home. But I think it's such a beautiful, beautiful, special feeling once everything's approved, everything's said and done, and you get the keys to your home. I think there's no price that you can put on that.
For sure. And I know sometimes for our military community, that closing process might be a little bit more complicated. In an ideal world, both parties who are involved in signing the mortgage would be able to go in person, usually to a real estate office or a mortgage lender's office, and sign all of the documents in person. But since our military families are often buying and selling homes in locations that they're moving from, I can share a quick story that my husband and I once bought a home when I was living on his military base in California. He was stationed overseas, well, on deployment in Japan. And the home we were buying was on the East Coast of America. So none of us, we weren't even in the same time zone as the property. And that did make the process a lot more complicated, but we made it work. We had a real estate agent that was willing to do a lot of virtual videos with us, virtual calls. She understood the limitations, and we were able to deliver all the documentation electronically. We did have to assign for a proxy, a human being that was related to us had to go in person to sign some documents and pick up keys. But it can all be done, but just make sure that you're open and upfront about your mortgage company and your real estate agent in advance, so that you can make sure you find a company that's willing to work with you if you're in that virtual situation.
No, if you can make it work with between Japan, West Coast and East Coast, I think a lot of things are possible.
Right.
That's such a great story. All right. So those are the basics of the traditional conventional loans. So we sort of learned of the application process, closing, also the types of loans that are generally available. Now we're going to jump into VA loans and conventional loans. So this is where we definitely want to pay closer attention to see what are the benefits, what are the differences, and how can we take advantage of these great benefits as veterans, right? So here you see a chart, and I'm going to sort of just go through it of the differences between VA loans and the regular conventional loans. So we briefly mentioned the down payment. So zero is required for qualified buyers. That's such a relief in so many ways. So the idea of having to save, a certain amount, a certain percentage, is off your back in that sense. It's always good to give a down payment, but it's not required. So regular loans are usually 3% to 20%. And remember, I mentioned the PMI, so at least 20% or more is required for the PMI for the insurance, right? You don't have to worry about that if you don't have to give a down payment at all. So you'll be saving thousands of dollars if you get a VA loan, in the sense that just the down payment isn't required. You can put down payment, but that requirement really changes things when you don't need the PMI, that insurance anymore. Next, the mortgage insurance. So I already just mentioned that no monthly PMI, saving thousands of dollars on the life alone. There you go. Where the regular, the PMI is required on the down payment if it's less than 20%. Okay. The next is the funding fee and costs. So the VA loan has a mandatory 1.25% to 3.3 funding fee, and it could be rolled into the loan. And veterans with disability ratings are exempt, where the regular has no funding fee. Instead, buyers can often pay for points, appraisals, and other varied fees. Okay. Next is the credit score requirements. Again, the credit score requirements are more lenient. There's no hard minimum set by the VA, though most private lenders look for a 620. And remember, the other slide said 650, so it can vary a little bit, but because there's no hard minimum, that gives a lot more flexibility for you to get your home through a VA loan. So the regular loans is stricter. Typical requires a minimum of credit score of at least 620. So it could be 620, but normally it's a lot more stricter. It's not flexible, and it could be higher, honestly. For closing costs, VA strictly caps closing costs and origination fees. The max is 1% rule. And for regular, the closing costs are generally uncapped and negotiable with the lender. So the fact that the closing costs are controlled and there's a max is a relief in so many senses. And then finally, the property usage. This is very, very important, where the home that you're buying must be for your primary residence. You must live in the home. What does this mean? It can be a secondary home. It can be a home that sort of, remember I was talking about fixture upper. By a fixture upper, I meant that you can live in the home and you can fix it up while you're living in the home. Because some people can buy a home, but if you're spending years fixing it up, you're not using it as your primary residence. So that's really important to take into account when we're thinking about the VA loan. Where the regular is more flexible. You can use it as your primary residence, your vacation home, or investment property.
Yeah, and I think that's really important to understand for, again, families that might be moving or planning to transition out of the military and settle in a different state. You have to occupy the home, I think, within 30 days for the VA loan. And if that's not something that your family is planning to do, if you were thinking about, buying a home in preparation for military retirement, but maybe renting it out first or not moving in within that 30-day window, then that can really be problematic for getting approved for a VA loan. It is also common for families to buy a home, live in it at their duty station, and then rent it out after they get orders to move somewhere else. That's a different situation. You could absolutely be approved for a VA loan initially, and then you'll have to potentially do a refinancing if you're going to move out and turn it into an investment property.
Absolutely. Thank you for that. All right. So the inspection and appraisal process, it's different with veteran homes or with the VA loans. So while buyers either use a loan, should technically get a standard home inspection, the official appraisal process can differ. So for VA loans, it requires a VA assigned appraisal who verifies the property and meets the government's NPRs. So the home must be structurally sound, have a functioning heating system, adequate roofing, and meet stricter safety standards. If the property fails these checks, the seller must make repairs or the loan falls through. And I believe this is because it must be a home that you can live in, what we were just talking about. So the VA appraisal has a lot stricter rules when it comes to appraising the home. For conventional loans, they have less stringent property condition standards. Appraisers primarily evaluate the market value, overall condition, and many conventional loans allow homes to be purchased as an as-is condition. So this is really important to take into account.
Yeah, and I think we saw in recent years, as the market has become so competitive, there's been a lot of talk of people using conventional loans and waiving the inspection process, which is definitely a risky move. It might get you a higher approval chance. It might make you a more desirable buyer and be the one that's selected to buy that home. But it also means, you're getting it as is. So there could definitely be major hidden issues with electrical or plumbing or roof or safety that you are not aware of. And in the VA loan situation, you can't waive that process. And that does make it a little bit slower and sometimes makes you a less desirable buyer when you're in a very fast moving competitive market. But we never really want to encourage people to waive the inspection process. It's kind of there for your own good.
Right. All right. So moving on. the VA approval, underwriting process, and protections. So the financial qualification and approval process have distinct characteristics, and let's look at these. So the government oversight, the VA loans are backed by the government, requiring the lender to secure a certificate of eligibility, a COE, and adhere to VA-specific debt to income guidelines, and typically a target of 41% unless the residual income requirements are met. Conventional loans are governed by Fannie Mae or Freddie Mac guidelines, giving lenders more flexibility on the DTI and risk modeling. The credit scores, the VA does not set a minimum credit score, making it easier to qualify with a lower credit score if the lender permits. Conventional loans practically require a minimum of 620 or higher, and down payments, VAs again require zero down payment. Conventional loans may require a down payment, often 3 to 20%, and require ongoing private mortgage insurance, the PMI, if you put down less than 20%. And so for protections, the VA loans require a built-in escrow repair rules, forcing sellers to address essential structure or safety issues if the property fails to meet the NPRs during the appraisal. Furthermore, the VA loans mandate the escape clause. If the home appraises for less than the purchase price, you cannot be penalized for walking away from the deal and retaining your earnest money. So again, I think what we can take away from here is the government oversight, the importance of the certificate of eligibility, the credit score and the down payment we sort of went over, but I think it's very, very important to know that the VA loans are, again, backed by the government, and it requires the lender to have the COE and adhere to the VA specific debt to income guidelines. Okay, so I think this really, really helps when it comes to the underwriting, when they're looking at your bank statements, they're looking at your credit, they're looking at everything. I think it really helps veterans in that sense. And the VA protections also help you through the escrow repair and the escape clause that also protects you in that sense. All right. So next, we're going to go through the VA mortgage loan speed, which is something we touched upon. So the VA loans can take slightly longer to close than conventional loans. So the inspection process can take a little longer because it's for our own good, right? Everything needs to be safety and functioning, but the VA loans themselves can take a little longer as well. So this is something that we need to look at and take into account. So it averages 40 to 50 days compared to the conventional, which is 30 to 45 days. And it doesn't seem like that much of a difference, but 10 to 20 days can make a big difference when you're trying to buy a house and you have other people trying to get that house as well. So just something to consider. Well, again, processing times depends on the lender and the documentation. The timeline typically stretches out through the 3 specific factors. So we want to keep this in mind. We have stricter property appraisals, which we just mentioned, government bureaucracy and red tape, and the mandatory clause. So I'm going to go through these. The stricter property appraisals, again, the VA appraisals must verify that the home meets strict minimum property requirements to ensure it's safe, sound, and sanitary. If the home requires repairs, the process pauses until the work is completed and inspected. This is something that we just discussed, and this is very, very important, and that can take a while. If there's anything that's wrong with the home, it would be good to understand how long that would take and how that changes the process. Next, the government bureaucracy and red tape. So unlike conventional loans, they are underwritten internally by private lenders. VA loans require additional administrative steps. So lenders must secure the certificate of eligibility to calculate the precise residual income requirements and get the final VA approval. So it takes a bit longer through the government bureaucracy. And next, the mandatory clause. So the VA requires this clause to purchase in the purchase contract. It allows the buyer to walk away with their earnest money deposit if the home appraises for less than agreed upon purchase price. Because this clause weakens the seller's leverage in negotiations, it can also draw out the appraisal and renegotiation periods. So the mandatory clause, it protects you that you can walk away because, again, it didn't appraise much less for what was agreed upon. However, it protects you, but the part that's not so great when it comes to sort of negotiations and you're trying to get that home, there might be someone else that grabs the home because they know that they're not going to walk away from it when you can walk away from it. But I think it's a bit better to be safer, in my opinion. But it might change how competitive you are when you are trying to get that home. All right. So what to expect? And this is sort of bringing everything that we've talked about together in simpler terms. And I know today's workshop is pretty information heavy, but I'm hoping that you can take a lot of the information with you. If sort of a lot of things sort of made sense to you or said, look, that's not going to work for me, that's going to work for me. And then apply it to when you're ready to buy your home. So again, standard timelines, we just mentioned this, but despite popular myths, when we're using an experienced VA lender and a property in good condition, VA loans can clear closing as fast as 30 days. They offer competitiveness. So because it's a longer appraisal and negotiation process, sellers in hot competitive real estate markets sometimes favor conventional or cash offers over VA loans. So that's what we mentioned. Again, the competitiveness is not as stark because it takes longer. But that's just something to consider. You may want to consider a conventional one. But if you're looking at a home that maybe is not as competitive, it's the perfect home and you can't save on the down payment, et cetera, and all of the other benefits, it may be the right thing for you. And again, going back, that there's no fixer-uppers. So meaning that you need to live in the home. But again, like I mentioned, you can still fix it up while you're living in the home. But again, it needs to be in the condition that you can live there. So the VA is not designed to fund distressed properties or severe fixer-uppers, and expect to shop for a move-in ready home to avoid the appraisal delays. So again, just remembering those things will help us a lot. And we went through a lot of these, but I'm going to go through these again. Again, remembering that there's no VA minimum credit score, the certificate of eligibility, again, really helps us in the sense that your lender pulls your COE to verify that if you're an active duty or veteran. Next is the credit review and compensating factors. Lenders assess your 2-year credit history to evaluate your record of all on-time payments, your credit score. If your credit score is lower than average, underwriters may still approve the loan if you have strong compensating factors. So this is really, really great when it comes to VA loans because they look at all of your history. They don't look just at your credit score, and they make sure one thing compensates for the other. Next is the residual income check. Unlike other loans, the VA requires a specific amount of money left over after paying your mortgage, taxes, insurance, and other debts. This ensures that you have a reliable cushion to afford family necessities like food and gas. And finally, credit freeze into closing. After your initial pre-approval, underwriters will re-verify your credit just prior to closing. Taking on new lines of credit like co-signing on a loan, buying a car during this period can derail your approval. So no new credits, no new loans. We want to make sure we concentrate on that home, and we don't want our credit to change during this long process. But yeah, so in review, we spoke about the basics, the down payments of the PMI, types of mortgages, right? The process, the pre-approval, the application, closing. And we also talked about the VA loans versus regular loans, the difference of the home appraisal process, that it does take longer just to make sure the home is safe, the VA approval underwriting process and protections, the VA mortgage, the speed, that it may take a bit longer, what we can expect, and the VH credit requirements. So I think this hopefully gave you a better bird's eye perspective of all the different types of loans that are available, including the conventional ones. We have the agriculture, we have the government loans, and we have the VA loans, and which can work best for you. And also how the VA loans differ from the conventional ones and what can work best for you and your family.
Thank you, Ruben. This has been really informative. I know you had to go through a lot of details and terms and acronyms, but I actually learned some things from your presentation, and I hope that our viewers did too. For those who are watching live, if you have questions for Ruben or for BB America's team, you can go ahead and put them in the chat. And if Ruben can't answer them for you today, then he can absolutely pass them on to some of the loan experts at BB America's to get back to you. And I believe we will be providing Ruben's contact information in the follow-up. So those of you who are attending, you'll get access to his email and you can contact him directly. Thank you so much for leaving that in the chat, Ruben.
Go ahead. No, I'm also putting our loan officer's email in the chat as well, so you can feel free to contact her. She has over 20 years of experience with mortgages, so she can absolutely tell you what can work for you, what options you have, and sort of what the market looks like right now as well, because it's constantly changing.
Wonderful. We really appreciate that. And while you're doing that, I wanted to wrap up with just some of the common questions that we hear from our EDGE members. Remember, also those who are watching, the EDGE is your free financial education platform sponsored by BB Americas and provided to you by GoVA Foundation. And you can find tons of calculators and tools and articles there. So we really encourage you to not only take advantage of contacting these BB Americas experts with your questions, but also use those interactive tools and articles and videos that are on the EDGE to get a firmer background in these mortgage questions that you might have. So one thing we hear from military families a lot is when you're doing a PCS move, you get orders and you're on a very restricted timeline. There are just a million things to be considering as you're moving from one location to another. And if you have to buy a home, that's a lot of pressure. So you talked about how to get started on this mortgage process. What would you say would be the first step for someone who has decided that they need to buy a home in the short-term future?
Honestly, especially when you're moving from one place to the next, or sort of you're overwhelmed. I think looking at maybe speaking to your counselor or advisor, seeing when you have the mental space to go through all of these things. And I think there's a time and place for everything. But I've noticed I make better decisions when I'm calm. And when you're working or deployed, there's less mental capacity to sort of like think of all of your options. And when it comes to such a big decision, we want to make sure it's the best decision, especially when it's a home for our family and us. So it's not impossible, but I think when we have the mental space to sort of sit down with our family, look at it together, and we're sort of calm minds and absolutely ready, we can say, okay, this is what my credit score looks like. And self-reflection, right? And self-reflection from a mental point of view, and also from a financial point of view, sort of saying, okay, let me look back at my credit because I've been so busy. So maybe I haven't looked at it in a few months. How am I doing? What does my credit look like? How much debt do I have? Sort of a self-reflection. And then when you're feeling comfortable, saying, okay, maybe take an assessment on EDGE. You can put in the numbers, sort of what your finances look like. It does the work for you, and say, and maybe even for fun, start looking at homes. I think that's part of the fun process. Like, oh, I love this one, or I love this living room, and this space would be perfect, to have a pool table. Who knows? But I think getting to that very calm sort of mental space, self-reflection, looking at ourselves, and then sort of flirting with our new home, I think will really, really inspire us, excite us, and will be more ready than ever to then go through this sort of the complex process. But I think if we sort of like take it apart little by little, we see what works for us, it becomes so much simpler. Rather than thinking of all the type of loans, you just look at maybe the main four. It's like, no, this is the main one, and then it becomes easier from there. So I know it was information heavy this session, but I hope in one way or another really simplified things for our viewers.
Yeah, for sure. Great advice to make sure that you're in the right space, not just financially, but in that right headspace too. And I'm thinking from a logistics standpoint, at the beginning of the process, you had mentioned the pre-qualification and pre-approval.
Right.
And then in the VA loan section, you talked about the certificate of eligibility. Now, those are two different things, but is
Yes.
that paperwork that you could be gathering at the same time as you start that home buying process?
Absolutely. I would do the easiest things first. The COE, if you're a veteran, you're a veteran. You just want to make sure that eligibility is ready, especially if you're deciding for the VA loan. And then the pre-approval as well. Again, we want to make sure we have both if you're going toward the VA loan, because it's going to make you more competitive. And since the VA loan offers less competitiveness, we want to have as much as possible. So when you do have that dream home, you can get it. Because it can be difficult. It could be someone else's dream home as well. We want to make sure that you get it, right?
Sure.
But yeah, we want to make sure that we get the certificate of eligibility. I think that's a very easy thing to square away. And again, the pre-qualification is different from the pre-approval. The pre-qualification just means that you're ready for the pre-approval. So it's the pre of the pre, right? The before of the before. Okay. But we want to make sure we get the pre-approval to really show sellers that you're serious and you're ready to go.
Okay, that makes sense. I think my last question for you is, if you do go through that process and say you're getting feedback from a lender that you're approved for a nice, healthy $500,000 loan, should you look at houses that are 100% of that capacity? Should that be your target when you're house shopping, or what do you recommend people do with that approval number when they get it?
Definitely. So there's the old saying of not putting all our eggs in one basket, right? So we definitely want to look at different homes and different prices. So maybe you can afford a home unto 500,000 and it's that dream home and you really want it. But again, we don't want to put all our eggs in one basket. We want to make sure that we have a few different options and a few different brackets. And we want to consider, again, that there's other fees, there's closing costs, and there's home insurance. There's a lot of things to consider when it comes to costs. So we do want to consider buying a cheaper home. And I think we're going to be a lot more confident, number one, that we can get it. And once, let's say we get a home for 400,000 instead of 500,000, we have a lot more confidence and peace of mind knowing that we can afford all of the extra costs, rather than we get that limit that, so for 500K, this is what I can get, and we're going to be a little bit tighter on money.
Right.
So, and again, it may not be that 500,000 home, but that other home might have a lot of pros. And I think all homes and all things have this pros and cons, right? So that home might have its pros and cons, but we can really make the best of it. And I've lived in different homes myself. I've always personalized it. I've always made it mine in one way or another. I've always improved it. And at the end of the day, it's, us and our families that really bring the love. We really make it home. So I think if you have options and we look at somewhere that's in the middle ground, that's a bit cheaper, it will give us the peace of mind and sort of that financial room for the other fees.
Very solid advice. Thank you for sharing that today. Well, we are almost out of time, so I just want to thank you, Ruben, one more time for sharing your expertise and your time with us today, and thanking BB Americas for just all of the support that they've offered to our military and veteran community members throughout Florida. It's so reassuring to have the support of local banks like this. And GoVA is honored to partner with you and work to answer these questions and provide these resources to our military community. So thank you for the work that you're doing. I will be sharing the emails that were dropped in the chat. Those will go out to those who registered for this event. So thanks again for your openness and willingness to answer questions from our audience. And we look forward to having you on again next time.
Absolutely. No, thank you. And it's an honor to really work with you and work with all of the veterans looking to hopefully buy a home soon and have a place to really live their lives with their families. So again, thank you.
For sure. All right. Well, this is GoVA and BB Americas signing off for today.